Welcome back to the channel. Today is sweet tea time. So those new to the channel, this is where Brad just talks about life, retirement, stock market, Bitcoin, whatever comes to his mind, which today a lot came to my mind. I don't know why. I thought last night that I had nothing to talk about on sweet tea, and today it's a totally different story. So let's get into it. I'm going to do a little sneak peek of the thumbnail for tomorrow's video. Yeah, okay, you're going to love that video. I'm going to get all the natives all riled up. Anything above 10% in yield is a scam. I love it. Love it. Gotta love how some of these people come out. Anyway, it's a good discussion because it forced me to do some back testing, and I'm going to share that tomorrow and some thoughts. So first of all, let's jump right into it. It is gold. Did you know if you invested gold back in 2002 that you would be outpacing the S&P 500? Say what? Yes, yes, ladies and gentlemen, you should have bought gold. Why invest in stocks? Don't get it. Don't get it at all. I did not know that this was a true thing, but if you look at the 80-20, you would have been outperforming, you would have had less dips. So there you have it. Think about that when you start talking about alternative assets. That's why Brad's looked at gold. I'm not going to buy gold. I'm going to stick with Bitcoin. I think that might be a good one. And tomorrow is the swearing in and the 21st. I don't know what days he's going to actually take charge. But Bitcoin is going to become the strategic reserve. Going to buy 1 million Bitcoin, and Bitcoin's going to go up to $500,000. Sometimes I watch people just get the reaction of, what are you talking about? But you never know, because the chart that I saw said that maybe being a strategic reserve may happen sooner than you and I think. But I don't know. That's a speculation, and I try not to speculate. But I do say that you should have some alternative assets, and you should have a little bit into Bitcoin, which is just mine. Now, I personally play BTCI because I want income. You can do whatever you want to do. I'm just playing the income. Now, I will tell you right off the get-go, once it gets above $110,000, I am not reinvesting in it. I am going to let it ride. Yes, ladies and gentlemen, let it ride. Take my 8% and reinvest the rest someplace else, because that gets back into my back testing that I did the last couple days while I'm watching football. Go Chiefs. So currently I live in Kansas City, or the Kansas City area, and we are kind of Chiefs fans. We lived here for 20 plus years until I did a great adventure around the world, but that's a different story for a different time. Global liquidity in the S&P 500. You can see how close these are correlated. Global liquidity and the S&P 500 definitely have some correlations to them. Keep that in mind. The bigger one to keep in mind with global liquidity is right now, global liquidity is not going up as fast as I want to see it. So we may see stocks come back down a little bit, but the bigger prediction is global liquidity will eventually go back up, and that will raise all boats. That's how it works. If I look at the Bitcoin price, global M2, you can see how close those are together. Yes, you can see how close global M2 is to Bitcoin price. And you have to sit back and go, wait a second, Bitcoin wasn't around back in the day. But you can see that since 2013, Bitcoin has really started tracking M2 price. And we're going to get a little more into that later on, because it's tracking very closely today. What else tracks the M2 money supply? For the last 12 months, Bitcoin, SPX, BT, gold. You can see how correlated some of these are to the global M2 money supply. That's why I also say that maybe you should have non-correlating assets. Just pointing it out that maybe that bond at the end, BND, may be a little hedge against global liquidity going up and down because it's not correlated. Again, it's all correlation to the global M2 money supply. Raoul Paul. If you don't know who he is, I suggest that you Google it. Just throw it out for conversation. You can see his chart of how close Bitcoin price is to the global M2 money supply. Yes, you can see exactly how close it tracks. He also points out that this time around, it appears, just appears, that we are tracking the 2016 and 2017 performance for the global M2 money supply. Not a prediction, not financial advice, legal advice, or any other advice. Just what somebody has said, that maybe this time around we are looking closer to what we did in 16 and 17. Now, if you go into stocks, that's an interesting one. Since 1970 to today, you can see free cash flow margins by decade for the top 10 largest stocks. Very interesting. Very interesting indeed how the free cash flow margins by decade for the top 10 stocks. Again, I didn't make this chart up. Somebody made it up for me. But it's good research because stock prices is always the forward prediction of free cash flow. It's just how it is. It's one of those things. But jumping back to Bitcoin, because we love Bitcoin, you should have a small allocation. Somebody said, why don't you just go all into Bitcoin? No, that is not how it works. Not in retirement. Sometimes I get people saying things that I have no clue what they're leading to. And I know the guy doesn't like Bitcoin, and you don't have to like Bitcoin. But if you're not staying up with the times, even as you get older, you're going to get left behind. But I show this chart every week. The Treasury went down, the Dixie went down, and S&P 500 futures go up, and Bitcoin goes up. Isn't that amazing? This is not the first week that I've shown this chart, and it's not the first week that you see the correlation between the two. You can figure it out later on if it's true or not true. I can only show you the charts. So the pi cycle top for Bitcoin, that's another one that I look at every now and then just because I like to see it. And you see that it's not to the top of the pi cycle chart. So there you go. It's not there yet. We'll see how it works out. Again, above 110,000, I'm not going to buy. I'm just going to take my percentage, reinvest the rest in something else, let it go up. And again, it's very important to understand that because I did some back testing due to that 10% yield guy saying it's a total forest. And there was a very true point to maybe some of his comments, but it's got to do with psychology of what you're taking and when you're taking it, because it's important to understand that. But we'll get to that in tomorrow's video. But right now, where's the most affordable cities? Oh, Detroit, Michigan. Now, who in the world wants to live in Detroit, Michigan? That is why it is the most affordable city, because nobody wants to live there. And we can go right down the list. I mean, Cleveland, no. Dayton, no. El Paso, oh my gosh, no. Rochester, New York, yeah, 10 foot of snow, no. Oklahoma City, now that's someplace maybe you would think about. I don't know. Albuquerque, New Mexico. I've been to Albuquerque, New Mexico, and no, okay, St. Louis, Kansas City, where I'm at. It is fairly affordable here. All right, we'll just say that. But we also have a lot of people dying. I don't know what they do downtown. They just crazy. Right? Least affordable cities. San Jose, yeah, New York, Boston, San Francisco, San Diego, LA. Yeah, look at all those places that I don't want to live. No, don't want to live there. None of them. I can't see a place on there for the least affordable cities that I really want to live in, especially Sacramento, California. I can tell you that I'm not living in Sacramento. Whew. Anyway, we're just going to move on from that one. Just thought I'd throw it out for conversation. H-1B visas. That's interesting. Look at all those H-1 visas. And then I get right over to the most profitable companies. Wow, is there a correlation to the H-1B visas and profitability? Again, this is just happens to be on the same slide. I did not purposely put the top most profitable companies and the H-1B visas on the same slide. I didn't do it on purpose, but clearly you can see some correlation to the visas and profitability. Okay, couldn't make it up. Couldn't make it up. It is what it is. Now, let's go into the 2025 predictions, through consensus. And this is important, especially to those Canadians. Yes, I have some Canadians in the audience. Right? Global trade and restructuring amidst tariffs. That's a good one. So we don't know what's going to happen. He's been backpedaling on some of the tariffs. So we don't know what the tariffs are going to do. We'll have to see. Increase geopolitical uncertainty and market volatility. We can definitely for sure see that one happening. S&P 500 will make new highs, returning 10 to 15%. Well, that's probably a pretty good guess. And I think that's 10 to 15% at the end of the year. I think we're going to hit much higher earlier, maybe 20, and backpedal down to 10 to 15. Market will broaden beyond the Magnificent Seven. That's an interesting conversation. Don't know if that's going to be true or not, but if you go back to the previous slides where I showed free cash flow was the highest among the top 10, you have to wonder. Robotaxis available in more major cities. Now, I've seen some of these robo-taxis down in Phoenix. Yeah, the Phoenix area. And they're interesting. I'm not quite sure that I'm going to get into one of those, but maybe one day we'll all be riding around in the Jetsons. Meet the Jetsons. You can't make stuff up like that. I mean, whoever foresaw the Jetsons living in the sky and he goes into work one hour a day. Now, if I had to only go into work 1 hour of a day, I might go get a job. But no. The answer is no. But 1 hour a day, I might be able to swing that. I mean, I spend more time making YouTube videos every day. There's no doubt for conversation. Agents are next for AI. Okay. Maybe. Yeah. If you're not playing the AI game, if you're not investing in the AI game, you're missing the boat. Now, you can growth invest and have some AI stocks or AI ETFs that have a bundle because you don't know which ones are going to go up or which one's going to go down. That's great. You should have a small percentage. Or you can play income with AI PI or something like that, but you should definitely have some type of AI exposure. Keeping that exposure small. I mean, really small. I mean, let's face it. If you look how I try to structure myself, I am not betting all on Bitcoin. I am not betting all on AI. I'm not betting all on the Magnificent Seven. I am spreading it out so I don't have to worry about a JOB. That's important. No JOB for Brad. So I was making YouTube videos and talking to you guys every single week. I like that. I like looking at this camera, sitting in the closet, talking to myself, and I am not crazy. Maybe a little bit. Pensions. Public pensions assets in the U.S. That is a lot of money. $11 trillion. And then you go down, you talk about pensions in other countries. And that's why it's important. Even as small as the amount of pensions in the U.S., you can see the pensions in other countries by population. Man, if everybody had a pension in the United States, that would be huge. But anyway, pensions. I cashed out my pension. That's where I got some of my money. But that's okay. I took the cash, rolled it into an IRA. It is going to pay me for the rest of my life, 8%. They were offering me 6. Well, 6%, I can make 8. Move on. Asset performance since the election. That's interesting. Bitcoin, 39%. That's why you should have a little bit in Bitcoin. S&P 500. Okay. We look at this, and that's S&P 500 growth. S&P 500 is only up 2. U.S. dollar index is up 5.5. Treasuries are down. S&P value is down. Bonds are down. European equities are down. U.S. REITs are down. That's starting to change. And we got China equities. Another interesting. Now, are AI models capable of scheming? I think that's interesting to talk about because I am definitely not a huge fan of putting all my information on AI, but I use AI to generate my images for my thumbnails a lot. So you got to sit back and say, be careful what you put out there. Don't put out your portfolio. Don't put your portfolio out there and say which stocks to pick, what can I do better for correlation. Oh, that's probably not what you want to do. Probably not what you want to do. Where does the U.S. and the world get their power? Where does the world get their power? Coal. Gotta love coal. No, you don't like coal. It puts smoke up in the air. All that environmental stuff. Yeah. Natural gas. Got a lot of that. Yeah, we're just going to talk about gas, and that's, yeah, you know where I'm going with that one. Hydro. I like hydro. Personal opinion, hydro's good. I like that one. Bioenergy, not so much. Oil, Wind, unpredictable. Solar, not the world's most friendly thing to be doing because it takes a lot of chemicals to make the solar panels. Then we get into where are the world's rare earth metals? And I've talked about this before. A lot of it's in China. Very little is in the United States. And what is in the United States is in states that they're never going to be able to mine it because they're just not very friendly to mining operations. But at the end of the day, we need to find rare earth metals, and maybe those rare earth metals will be mined on asteroids. There goes Elon Musk again, making more money than you and I will ever have because he'll mine up on some asteroid and bring back those rare earth metals and make, I don't know, something. Total speculation. That's another total speculation. Don't go buy Elon stocks and stuff like that. Speculate on mining on planets and never know though. You never know where we will be in 50 years. Have we seen a peak in McDonald's in America? That's an interesting chart. Didn't think about how many McDonald's restaurants are declining. Interesting. And that's in America. Maybe we're starting to see a little more. I will tell you that I'm not overly impressed with the little touchscreen things. I don't know, maybe it's just because I'm old. It takes me a couple seconds to figure out which button to touch, and then you touch it and somebody else touched, and they could have been sick. So you got to go in and use hand sanitizers. Got to keep yourself healthy. Don't get any of these germs. Just throwing it out. Semiconductor companies. That's another one. Global semiconductor companies. And we can see Broadcom, and you can see NVIDIA, and you can see which ones are biggest market cap. And I just got to say, yes, the world is going to be ran on semiconductors, because it takes semiconductors to do the AI. It's all interrelated. It's all interrelated. Make sure that you have the stocks and ETFs and your income and things that are interrelated, and make your money. Just throw it out. Conversation. So let's do a little quick summary and get you on the way. So the summary of the week is majority of the indexes see varied movements this week following the geopolitical developments. U.S. strong employment figures. At the end of the day, I am so glad that we're seeing Israel and Hamas ceasefiring, because that doesn't do anybody any good. I mean, that will never go away because it's all religious, and I just feel bad for the people that live there. I do. The 10-year Treasury plunged. Say plunged, it went down. I'm going to say that's an interesting conversation with the treasuries. And, you know, they lied on the jobs report, just like they do every other one. There's still fires out in California. I feel bad for those people out in California. It's just burning down. Just hope they don't rebuild. And that was a joke. Totally joking there about not rebuilding out. But that is going to have an effect on everything else, because when they start rebuilding all those communities, and that may play into different CPI going up and going down because of all that rebuilding that's going to have to happen out in LA because of the fires. It's going to make it a little wishy-washy, but we'll see. We'll definitely see. The financial sectors had a big boost along with Bitcoin. Energy, right? Yeah, because of the end of Israel and Hamas. So you saw energy go up. That's an interesting one. But there is a bunch of short interest increasing on consumer staples. Well, I'm going to throw this out. And this is just something from years ago. And we talked about the recession. One thing about recessions, everybody's still going to eat. So consumer staples will still be making money because we'll still be buying food. That is just something to think about. I noticed that 2008, that, you know, there was a little play there with consumer staples being a lot more stable than other funds. Again, we're seeing value, and that's interesting. Value versus growth. For weeks, we saw growth. Now we're seeing value. This is the second week in a row, or third week in a row that we're seeing value. That's interesting there. And we're going to talk about the global dollar fell on Tuesday. There you go. As he's paring back the tariff plans. So we don't know where those tariff plans are going to go. And keep in mind, and this is something important, the tariffs that he applied in his first term were still kept, even during Biden. Biden did not roll back those tariffs. So you sit back and go, well, wait a second. If he's such a bad guy, then why did Biden keep those tariffs? And yeah, and I will say there's one thing that you're going to get both sides of the aisle to agree on, and that is enemy number one for the economy is going to be China. That's because they're big, and that'll eventually work out, but you got to keep it in mind that we're trying to protect ourselves. And those that don't want to protect us and just go for free for all, you're going to have to look at that bank statement one day and say, why don't you just give some of that money that you have in your bank statement away? You got to be mindful for yourself and keeping it to yourself. So the S&P sector's performance around the 2024 easing cycle. And this is the Fed cut in 2024 in September. And we see S&Ps are up. We see industrials are up. Communication services is up. You can take a look at those and see how each one has fared since September 2024 Fed cut. Interesting one. And lastly, we're going to talk about fear and greed. I'm starting to see that start to tick up a little bit higher. Remember, we should have been more greedy. We should have been a lot more greedy and aggressive when it was fearful. And now that it's starting to tick up, everybody's like, oh, the markets are back. Sorry, you missed the opportunity when it was more fearful. That's the last slide that I have for you. I will tell you that for members, I have an open trade on that Excel spreadsheet. That is changing. I'm going to do a member only video, tell you which one I'm jumping to. It is still going to be a bond or preferred stock. That's I'm just going to change it out to a different one, and it is one that is not on anybody's metrics. It came to light. Really, it came to light when I watched that podcast. Man, I have to start throwing up. When I watched the podcast of the CEO of EIC and ECC, he owns a preferred stock, and I am going to buy that one on Tuesday. Markets closed tomorrow. Tons of stuff to still test. Football today. Life changes for Brad. I'm still living in my apartment. Don't know. I will be going back into the RV and going to the beach. And it's really, that's the bigger one. It's not so much the RV, it is the beach. We will be going to the beach at the end of March. But you have a transition. If you've never had a downsize, and this is going to be more downsizing than anything else. If you haven't downsized from a large house to a smaller unit, and it doesn't matter if you're going to go full-time RVing or go into a smaller house, that downsizing process takes time. So we have to move everything that we have that we're not going to put into the RV into a storage unit. And we have to move everything that we're taking with us into the RV. So we're going to put the RV on an RV spot at the end of February. And we're going to start transitioning the office and cooking stuff and groceries into the refrigerator and making sure the RV is totally good to go. We had a new roof put on it earlier this year. That was important. So the RV is good to go. We had new brakes put on it. Yeah, everything should be good to go, but we're going to actually power it up, get it going for a month before we have to do the big travel. And that's another one. If you haven't, there's a lot to getting from point A to point B in an RV, especially when you're moving everything with you. There is logistics that really have to think about in those logistics. So we have some logistics planning. We did some logistics planning yesterday. Came up with a plan of how logistically we're going to make everything happen in a 30-day time period so we can make it to the beach and be at the beach for almost 8 months. Yes, 8 months. After that, we don't know if we're going to be going to southern France or we're going to be going south for the winter, but we're going to go someplace warm because right now it is minus 2 degrees outside, and that's why we're still in an apartment. Because, wow, it was cold this morning when I took the dog out. But anyway, that's Brad's plans, and Thank you to all the new members that have joined, and look forward to that member-only video coming shortly about what I'm going to change it over to. And I am going to do a whole little thing on the spreadsheet too, because if you went and looked at the spreadsheet, you saw I made some changes yesterday, but we'll do the video and talk about them. So until next time, God bless.